Katie Dean, senior economist with ANZ in Melbourne. She has worked at Australia's Treasury Department. And Katie, how interesting it is to have you on the program today. So what are you seeing that the majority of economists that we surveyed aren't?
Yes, well, good afternoon. I think the first thing that I want to point out is that it's going to be a very close call. Clearly, when the RBA did decide to cut interest rates in December, they weighed up the opportunity to cut interest rates against the opportunity to keep rates on hold. And I think it's going to be a similar decision-making process this week. Now, the difference, I think, between us and the rest of the market is a couple of factors. First of all, we don't think that the economy domestically here has deteriorated by more than what the RBA had previously anticipated when they decided to cut interest rates in December. If anything, the data is actually proving that the economy is really flatlining or treading water at the moment. Yes, some of the risks have continued to rise, particularly around the labour market, but likewise some of the risks that were to the downside in December have actually started to ease. So we actually think that the economic data here is pretty much in line with RBA expectations, which is why we don't think at this stage they'll be ready to pull the trigger. I think the other really important reason for our view that the RBA will stay on hold is that we've actually seen quite an improvement in the global environment since the RBA decided to cut rates last in December. The most important country for Australia, of course, is China, and their concerns around a hard landing have actually started to be allayed a little. In fact, the data has surprised a little on the upside. And when you combine that with a US economy which is continuing to surprise on the upside and evidence that, yes, the risks in Europe are very, very high, but so far policy is providing some stabilisation, then I don't think you can quite mount the case for a need to cut a further 25 basis points here.
Okay. Well, interesting reasoning there, Katie, but of course I got to point out what happened yesterday when we got retail sales in the month of December when people usually shop for Christmas. That came in below estimates, in fact. And then, yeah, you talked about the jobs growth, the jobs market, the worst, by the way, in Australia in 15 years. You don't think that that's calling for a cut down in borrowing costs to help the average Australian?
Well, let's look at that data in detail. First of all, retail sales were weaker than expected. They came in at minus 0.1%, but that was all price deflation. In particular, we had some very sharp falls in fruit and vegetable prices in Australia because those had been elevated due to the floods that we saw in Queensland and parts of Victoria at the start of 2011. So it was a lot of price falls that actually weighed down that retail sales result. If we exclude food and if we also exclude restaurants, cafes and takeaway foods, we actually saw that retail sales rose by 0.8% in December, which is not a bad result. Now, in terms of employment has weakened substantially in Australia, there's no doubt about that, and also the labour market clearly still has further weakness to go. So we do think that the unemployment rate is going to head a little bit higher, but on that front we've actually seen some very encouraging leading indicators lately. The ANZ job ad series, for example, which came out yesterday, actually rose by more than 6% for the month of January. Now, that has been led by very strong employment growth in the resource-rich states such as Western Australia, Queensland, also the Northern Territory. And what that data is telling us is that at the moment there's enough job creation in those states to offset job weakness in some of the other states.
Katie, okay, so we're running out of time here. You don't expect an interest rate cut today from the RBA, but what about at the next meeting in May? Are you expecting them to do anything then?
Yeah, look, they'll meet again monthly, so they'll meet again in March, and I think if they don't cut today, then certainly there is still a very strong possibility that they'll have to cut by at least 25 basis points before the middle of this year. They will want to try to contain that rise in employment, and of course we've got higher funding costs in Australia, which will potentially increase the, tighten financial conditions here.
Okay, that's a bold call, Katie. So you ANZ calling no rate cut today. Only 3 out of 27 economists that we surveyed are predicting no move. Thank you for that, Katie Dean in Melbourne.